Hey, welcome back to my channel, Martin Day Trades. I am Martin Gonzalez, and today I caught a break-even trade. I'm going to be journaling my trade with you guys, but I have a special vlog for you. Not a vlog, but like advice, wisdom for you on why break-even trades is going to help you become a profitable trader, and why, in my book, catching a break-even trade is a win to me. Now, not every time I move my stop loss to break even, I hold it there. I'm getting better with that. That is a form of discipline in which if you can hold a break even trade and keep it at break even, you will be profitable long term. Now, losses are okay as long as they're small, you can always make them back. But if you're looking to preserve your capital, leaving your break even stop loss at your entry after your trade goes to TP1, if you're risking 50 points, if it goes 50 points in profit, move your stop to break even. And if it comes back, well, guess what? You preserved capital because it could either keep going in the opposite direction. It could have just came back to wick you out, take you out of the trade, and then go in the right direction. But you did not lose anything. Now, let's go to the charts and do this daily trade recap for you guys so you can see how I was looking to where I got in, why I got in, where my stop was, where my take profit was, and what happened when I got to TP almost 3 and it retraced and came back and kind of just ranged for the day. So now that we are here at the charts, you can see that I have this 4-hour chart up. I drew I did the highs and lows of my liquidity lines, but I added this line right here. It's called I saw a 4-hour gap. It's this area right here. Now I don't get in anymore when I see a gap. I don't try to get in anymore in this range. I just wait till the end of this range for the price to wick to go higher, and that will be my trade. So I did a line from this top of this wick from the left, the first candle, second candle, third candle. You know how a fair value gap is made, the body is the gap, but usually price likes to come down to the bottom of this and then kind of go high, do its thing, go higher or range. And I caught a good trade today. However, it just didn't pan out to where I was looking to take profit. It didn't even run the previous day high, which would have been right here. And we'll say right there, it didn't run that previous day high. So you can see it got close to previous day high. My TP3 was right there. I was looking for it to run the top of this London high, because normally that's what happens, guys. It'll trade the range. This is a range right here. It stayed more towards the bottom half of this range right here. Well, I'll show you guys, be more specific. That's the range, but I was expecting it to come a little bit higher in this retracement, and I could do a fib from this high to that low right there, and it didn't even get to the 50%. It essentially got to the 38%. It was a TP2 trade. I was looking for it to go a little higher towards the 79%, but I was looking to exit at the London high, and it just did not, right? So you can see the 4-hour fair value gap where I entered was right here. You can see that I entered right here and it immediately had a reaction. It came down a little bit. And then it had an immediate reaction, which I thought was just gonna have a retracement to then just go higher. But that's not the case. It did not happen. And yeah, just it wasn't a bad trade. It was a good trade idea. There was an immediate reaction off this area where other people were seeing what I saw, right? Correct? So, but what happened was, people were scaling out and people were getting in for the shorts. Now, someone wanted to go short right at this London low, you know, that that wasn't even a very great trade in itself. That it was just a really choppy day. Let's say price came up here, 50-point stop. They would have got stopped out right here. Same thing if they got in right here, they would have got stopped out right here. The only time they would have gotten in was at this bar right here to then maybe get a TP3, right? Where's right there. That would have been a nice little TP3, but that's not what we were looking for. And that's not exactly what happened. It didn't happen that way. So kind of a choppy day. I'm glad that I got out essentially break even. I was break even. And what I want to do now is just say my trade idea was A plus. The entry was A was the 4-hour fair value gap, and it had an immediate reaction. My trade got to TP 2.8. We can actually verify that. At the high, it was a TP 2.72. 2.72. So it wasn't even 2.8. 2.72. I moved stop loss to break even, and it came all the way back to my entry, went past my original stop loss placement, and then it kind of just ranged. My trade management was A plus because I didn't move my stop loss back to its original placement, which would have been a loss. Okay. Now I'm just gonna paste this photo and we are done. I can see clearly everywhere my entries, the time, and there's nothing more I could do to that right there. So finish my day. Yes, finish the day. Close. Okay. This is still my dashboard for my funded account, guys. I haven't uploaded. I've been taking a combine account. I haven't uploaded my metrics for the combine. I might do that this week. I am in a little bit of drawdown. Now, I had a losing day on Tuesday right here. Okay, actually, let me, I'll just do this. I had a losing day on Tuesday. On Wednesday, I had a break-even day in which price started coming down, and I moved my stop loss to half my stop loss placement, so I lost half a trade. Thursday, I was break even, and on Friday, I took a loss in which I had a break even trade, but then I moved it to -1 again, my original stop loss placement, so that I had the 23rd and the 25th. I believe those were the days where I took 1.5 losses extra unnecessary. So it's not keeping me in the game. So I'm on this new account, and I did have a legit loss on the 22nd. Today's break even. I would only have one trade so far within these, first trading days. in which I only have one loss. I would only be down $250. That's only one trade. So by the end of this week, let's say I catch a total of a TP4, I'd be up still $750 by the end of this week. But because I lost unnecessarily, now this is going to go back to why I'm going to talk about why break even to me is a win at the end of the day, is because yes, you could have a lot of little losses here, like all these little losses. I have not as many break even days, like 1, 2, 3, 4 break even days, but there was probably 2 or 3 extra days in these red days in which were unnecessary losses because I did move my break even stop loss back to its original spot, or a little under, maybe half of the original spot. So what I want to show you guys is managing trades, keeping them at a specific designated amount, like $100 or $250 in my case, and not going any higher than that, so that I can keep these bars pretty uniform across the board at a designated -1. This is unacceptable. Now, once I start catching trades, these trades right here always outweigh all these trades. So once I catch like a good week and I have like 2, 3 wins, maybe even 4 wins in 1 week, all those wins will outweigh all these losses. This is my funded account, and I'm gonna prove it to you guys, excuse me, in this combine. Now I'm a little sad and disappointed in myself in the fact that I am down 1.5 trades because I did move my stop loss. Now, let's go ahead and kind of explain this to you guys a little bit more, okay? Monday, let's do a month's worth of data. Monday, Tuesday, Wednesday, Thursday, Friday, okay? Now, let's say why these trades are, I'm just moving the camera here, guys, from the light. I'm not sure if that was making a difference, but let's say Monday, first of the month, there's 4 weeks, we'll do 4 lines. Monday, and we're gonna include some break-even trades in this data, right? And then I'm gonna kind of compare it if those zeros turned into -1s, if I move them back down to its original stop loss placement. So let's say Monday I caught a 0, just like today. Tomorrow I catch a TP4. Wednesday I catch a TP3. Thursday I catch a 0, and Friday I catch a 0, or -1. We'll just, I'm gonna say there's gonna be a loss, just in this data. The following week, and you know what, let's just do 1 week at a time. So right here, right now, because we held those break-even trades, we are +4, +3, -1, which equals +6 at the end of the week. Now, let's say I had a -1 and -1 added to those Mondays and Thursdays times. That is now +4, okay? Still profitable, but not as profitable. Lucky we got one good trade. We got 2 wins that week. Now, let's say I got we start a new week. We did +3 on Monday, and this week's a little rough. So we only have 1 win, I'm gonna say. So Tuesday's a 0, Wednesday's a 0, Thursday's a -1, and Friday's a -1. So by the end of this week, we are up +1, just made a little bit of profit, right? That's good. We managed risk. We did not move break-even stops from its break-even placement, right? So let's say we did that. Let's say now we're not following the rules. We're moving break-even stops back to its original stop loss placement, right? So now, instead of having 1 win, 2 break-even days, and 2 losses, let's say we have 1 win and 4 losses, right? Now that +1 week now is a -1 week, right? And it all counts at the end of the month to see where you stand, right? So let's say we're gonna do a 3rd week, right? We're gonna do a 3rd week, and I want to say this week is a little bit more profitable, right? We catch 3 good wins, right? We catch a TP4, a TP3, a TP4, that's our 3 wins back to back to back, break even, and a -1. So for this week, 4, 8, 9, 10, 11, this week is a +10. We did really good this week, right? Now let's just substitute that 0 for a -1. And now this week is still profitable, but we gave back some profits because we wanted to not follow the rules, move our break-even stop loss back to its original placement. We're now up +9. We gave back +1, right? So let's go to the fourth week, and it's gonna be a profitable week, but like week 1, a little bit profitable, not as profitable as week 3, but also not. Well, let's have this as a losing week. Actually, guys, let's have this as a losing week. So we have a break-even day on Monday, break-even day on Tuesday, Wednesday's -1, Thursday's -1, and Friday is -1. And so what this means is there's 2 break-even days, 3 -1s, which adds up to -3 for that week, guys. This is a losing week, right? Now, what we're going to do is substitute those break-even days with -1 and -1. So that -5, which is manageable, right? You can make back -3 in one good trade. Now that we're losing 5 straight days because we moved our break-even stops to -1, we are down now -5. -5 trades aren't so common. -4s and -3s are way more common than -5s, 6s, 7s, 8s, 9s, but they do happen, negative TP5 trades. But what I want to do is now I have here where if we keep break-even stop losses, what are we left with at the end of this month? So with week 1, we had a +6 if we kept stops at break-even. Week 2, +1. Week 3, +10. And week 4, -3, which would have equated to 10, 16, 17, 17 minus 3 is +14, okay? So +14. That's a great month, guys. That's a great month because we kept our break-even stop losses at its placement. We did not violate it and move it back to its stop loss, its negative stop loss placement. Now, what I want to do is do this again where we still had good trades. We were managing our losses, but we did not have any break-even days because we moved our break-even days to those -1s. So you can still be profitable having nothing but no break-even days, having negative loss days, but what we're trying to do is minimize those. Now, with days where we move our break-even stops back to its original -1 stop placement, we have a +4, -1, +9, -5, okay? So what that means is 8, 12, 12 minus 5 is +7. So this is, so, okay, stop loss moved equals +7. We had a +7 week or month, okay? So here's some data for you guys. If you keep your break-even stops at break-even and you've just followed the rules, keep your losses minimal, and just your wins are greater than your losses, in this set of numbers with break-even days without moving them, you caught a plus TP 14 month. So let's say you risked $1 each of those trades to make, at the end of the month, you made $14, right? Now, let's say you risked $1,000 per trade and you followed your rules. At the end of that month, you made $14,000, okay? Now, if you risked $1,000 and you did not take any break-even trades and just kept them at -1, you would have still been profitable with the trades that I just kind of arbitrarily made up. So if you risked 1,000, you would have made $7,000. So, but with that being said, right, it's still good. It's still good, right? 7K on the month, but there's a 7 TP7 discrepancy here because the break-even days, there was 7 days here in this month where the trade should have just been break-even at 0. So by moving stop loss from break-even back to -1, this person gave up $7,000 worth of profits. $7,000 just because for some reason inside their head and their emotions, they wanted to make money or got hopeful or wishful that the trade would play out in their favor, when at the end of the day, with enough back testing, enough live trading, you know that these trades, if they start to reverse, there's a high chance it's going to continue in the opposite direction. What we're doing is wagering, saying, hey, this is where I'm looking to get in, this is where I'm looking to get out. And this right here shows that if you do not follow the rules with moving your stop loss to entry, break even, you're gonna lose out on a lot of profit made at the end of the month. And let's say you had 3 losing weeks and 1 winning week, but your losses were mitigated because you did keep your break even at your stop loss at break even. Your loss for the month would be a lot smaller for a monthly loss if compared to if you moved your stop loss back to -1. Now you're gonna have a big red month, not super big, but you're gonna have a big red month compared to a small red month, just because you didn't. So that is what's gonna help dictate, what's gonna help make you, compared to 99% of other people out there who are learning to trade or who have been trading and do not have the emotional, psychological control over their actions. That's why they're unprofitable. This is following this one specific rule is going to make you profitable. Now, that's all I have for the day, guys. I just wanted to explain to you why I'm keeping your stop loss at break even though it may go right to 50 points in profit and then start to reverse. Just keep it there. Come back tomorrow and let the ratios add up. The risk to rewards add up, because if you don't do that, it's better to take a 0 day than a -1 day, because when you do have winners, they're definitely going to outweigh your losses, and your break-even days won't even count against it because they're just 0. So please subscribe, like, and comment. Send my link to anybody who's looking to get into trading, who is trading, who's struggling, or send this to somebody who doesn't really understand risk to reward, the ratio risk to reward, risking 1 to make 2, risking 1 to make 3, risking 1 to make 4, 5, 6, 7, and letting those break-even days help with all those little -1s, zeros, -1s, +6, So please subscribe, like, and comment, and I'll see you guys tomorrow.